Y mientras tanto nosotros miramos el mercado para ver cuáles son las oportunidades de inversión en una jornada como la actual, donde parece que todavía hay ciertas dudas, no quizá tanta volatilidad porque tenemos semana corta, pero dudas con los mercados. James Athey, Investment Director at Abrdn. Good afternoon and thank you for being here in Negocios Televisión.
Hi, good afternoon.
James, at Abrdn, which do you think are good investment opportunities right now in the current context in the economy and in the markets?
We would certainly be looking towards the defensive end of the spectrum, whether you're looking cross-asset, multi-asset, or indeed specifically within either cyclical or defensive asset classes. I think cyclical equities were already expensive. The run-up we've seen in recent weeks, largely in relation to as a result of falling yields, we already think has gone way too far. We think bond yields are attractive in most jurisdictions, particularly in areas where central banks have had a more aggressive and/or robust response to inflation, and that actually includes a lot of the higher quality emerging markets, higher quality emerging markets, particularly within Latin America.
James, do you think right now, after the OPEC's decision of cutting oil output, do you think it's time to be long on the oil and the energy market in general?
No, I don't think so. I think the supply dynamics are often taken in isolation and out of context. Obviously, what we saw over the last several years has been a series of large supply shocks, the Russia-Ukraine situation really being the crowning glory, particularly for energy markets. And yet we've seen energy prices declining. We've seen oil prices range trading really, but looking towards the lower end of that range, because ultimately there is a demand story there as well. And the efforts of central bankers to correct the mistakes they made post-pandemic have obviously begun to have a more significant effect on economic activity everywhere. And I think that demand side of the oil story, of the energy this year, will be the dominant driver. When we get into next winter, we could well be talking about a more significant upside for energy markets as sort of heating demand picks up in the northern hemisphere. But the outlook, I think, is one of range trading, but towards the low end of that range.
Now about central bankers, what do you believe could Christine Lagarde or Jerome Powell will do on the next meeting of the Federal Reserve and the ECB? Do you believe, for example, the ECB will make a 50 basis points rate hike?
I think they would like to. I think the inflation picture is even more complicated for the ECB currently, not just because of the strains we've seen in the banking sector, but because recent inflation data showed significant declines in headline inflation, but significant persistence in core inflation. And the relationship between headline and core can go in both directions. Core can lead headline and vice versa. And the ECB really will struggle to come up with a high conviction view on which to focus on. So I think they would like to hike another 50. I suspect they will be unable to do so because events will overtake them. I think the Fed is much closer to the end of its cycle, probably closer than they themselves believe. But I do expect the data to steadily, but then more rapidly, show that the economy really is suffering under the weight of tight money policies. And I think that will bring all hiking cycles to an end in the coming months.
James, what do you think about the fixed income market right now?
It's really attractive. It's attractive. I mean, we haven't seen yields this high for many, many years. really going back to the financial crisis. We haven't seen treasury yields of 4% and above, and ECB policy rates haven't been this high over that similar time horizon as well. So in isolation, they look attractive. Again, my expectations that the next major moves from central banks will be cuts, not hikes, will be very supportive for rising bond prices. I think risk assets are incredibly expensive in isolation. Above average price earnings ratios off of what look incredibly hopeful earnings forecasts is not a great value proposition to start with. And then when you look at earnings yields and dividends yields compared to bond yields, and indeed if you look at those comparisons on a detrended long-term basis, bonds have not been this attractive relative to risk assets in a long time, government bonds in particular. And if I'm right and we are on the eve of a recession, being able to buy cheap defensive assets and sell expensive cyclical assets should be a very attractive proposition as the economy slows.
James Athey, Investment Director at Abrdn, thank you so much for being in Negocios Televisión, and good afternoon for you.